Hey there, fellow investors. Welcome back to Financial Mo. Today, we're diving into a topic that often confuses many: mutual funds versus ETFs. Which investment vehicle is right for you? Let's break it down in simple terms so you can make informed decisions. Before we jump in, don't forget to hit that subscribe button and ring the notification bell to stay updated on all things finance. Introduction. Alright, let's start with the basics. Mutual funds and exchange-traded funds, ETFs, are both investment funds, but they have some key differences. Think of them as different flavors of ice cream, both tasty, but with unique ingredients. Definition of mutual funds. Mutual funds are like a potluck dinner where investors pool their money into a fund managed by a professional fund manager. These funds can invest in a variety of assets such as stocks, bonds, and sometimes a mix of both. Example. Imagine you're at a potluck, and everyone contributes a dish. In this case, each dish represents a stock or bond. The fund manager decides which dishes to include, aiming for a delicious blend that aligns with the fund's objectives. Investors then own shares in the potluck, or, in finance terms, shares in the mutual fund. Pros and cons of mutual funds. Now, let's talk about the pros and cons of mutual funds. One advantage is diversification. With a mix of assets, the risk is spread out. However, the downside is that you might have to pay higher fees, and some mutual funds require a minimum investment. Definition of ETFs. On the other side of the table, we have ETFs, exchange-traded funds. These are more like a buffet where you can pick and choose exactly what you want from a wide selection of dishes. ETFs are traded on the stock exchange just like individual stocks. Example. Picture yourself at a buffet where each dish is a specific investment, like a stock or a bond. You can choose exactly what you want on your plate and buy or sell it throughout the trading day. ETFs provide flexibility and transparency in a way similar to picking your favorite items from a buffet. Pros and cons of ETFs. Now, let's dish out the pros and cons of ETFs. One major advantage is flexibility. You can buy and sell throughout the trading day at market prices. Plus, ETFs typically have lower expense ratios. On the flip side, you might face brokerage commissions when buying or selling, and the selection can be overwhelming for some investors. Comparing liquidity. One key factor to consider is liquidity, how easily an investment can be bought or sold. Mutual funds are bought or sold at the end of the trading day at the net asset value, NAV, while ETFs are traded on the stock exchange throughout the day at market prices. Examples of liquidity. Think of mutual funds like a daily auction where everyone places their bids at the end of the day, and the fund's price is set. ETFs, on the other hand, are like a continuous auction where you can place your bid or ask price whenever the market is open. This constant trading ability is why some investors prefer the liquidity of ETFs. Tax efficiency. Let's talk taxes, always an important consideration. Mutual funds may distribute capital gains to investors when the fund manager sells securities at a profit. ETFs are structured in a way that can minimize these capital gains distributions, potentially making them more tax efficient. Examples of tax efficiency. Think of mutual funds as a shared kitchen where capital gains are distributed to everyone. ETFs, on the other hand, operate more like a personal kitchen where you only pay capital gains taxes when you decide to sell your shares. This tax efficiency can be appealing to many investors. Conclusion. In conclusion, both mutual funds and ETFs have their pros and cons. Mutual funds offer simplicity and professional management but may come with higher fees. ETFs provide flexibility, transparency, and potential tax advantages, but the trading flexibility might not be suitable for everyone. The right choice depends on your investment goals, risk tolerance, and personal preferences. Remember, it's not about finding the best option, it's about finding what works best for you. If you found this video helpful, give it a thumbs up, and let us know in the comments which investment vehicle you prefer. Additional information. Before we wrap up, let's sprinkle in some extra information to help you make an even more informed decision. When it comes to mutual funds, it's crucial to look at the expense ratio. This is the annual fee expressed as a percentage of your investment. Lower expense ratios mean more of your money stays invested for potential growth. Also, check if there are any front-end or back-end loads, which are sales charges that may apply when buying or selling mutual fund shares. For ETFs, keep an eye on the bid-ask spread. This is the difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept. A narrow spread can save you money, so pay attention to this detail when trading ETFs. Additionally, understand the tracking error, how closely the ETF follows its benchmark index. Lower tracking error indicates a more accurate representation of the index performance. Now, let's talk about some popular examples. Vanguard's Total Stock Market Index Fund is a well-known mutual fund, offering broad exposure to the U.S. stock market. On the ETF side, SPDR S&P 500 ETF Trust, SPY, is a heavyweight, tracking the performance of the S&P 500 index. Both are widely used by investors and showcase the diversity within these investment vehicles. Lastly, consider your investment horizon. Mutual funds often work well for long-term investors, while ETFs can be suitable for both short-term and long-term strategies. If you're a hands-on investor who likes to adjust your portfolio frequently, the flexibility of ETFs might be more appealing. Wrapping up. Alright, that's a wrap on our mutual funds versus ETFs breakdown. I hope you now have a clearer picture of these two investment options. Remember, whether you go for the potluck of mutual funds or the buffet of ETFs, the key is to align your choices with your financial goals. If you found this video helpful, don't forget to hit the like button and share it with your fellow investors. Subscribe for more finance content, and as always, happy investing.